Losing money in algorithmic trading is an inevitable part of the journey, and while painful, it offers invaluable lessons for those who persist in mastering the craft. One of the first and most critical lessons is that even the most robust strategies fail at times. No strategy works in all market conditions, and overconfidence in a system can lead to catastrophic losses. This realization taught me the importance of diversification, not just across assets, but also across trading strategies. By spreading risk, I learned to manage drawdowns and improve the overall stability of my trading portfolio. Another lesson was the danger of overfitting during backtesting. Early in my journey, I created strategies that performed exceptionally well on historical data, but failed miserably in live trading. This was because I unknowingly optimized the models to fit the specific patterns in the past, ignoring the reality that markets are ever changing. I came to understand the importance of simplicity in strategy design and ensuring that strategies are based on sound, fundamental principles rather than exploiting temporary market anomalies. The third lesson involved the hidden impact of transaction costs. Initially, I overlooked the significance of slippage, broker fees, and market spreads, which ate into my profits. High frequency strategies that looked promising in simulations turned out to be unprofitable once these costs were factored in. This experience underscored the necessity of accounting for all trading costs during backtesting and developing strategies that could withstand these real world expenses. A particularly humbling lesson was the psychological toll of losses. Despite using automated systems, the emotional impact of seeing my capital dwindle was profound. This highlighted the importance of emotional discipline and a clear understanding of the risks involved in algo trading. I learned to detach myself from the day-to-day fluctuations and focus on the long-term performance of my systems, allowing the algorithms to operate without interference. Another hard-learned lesson was the necessity of rigorous risk management. Early on, I underestimated the importance of position sizing and stop-loss mechanisms, which led to outsized losses on a few trades. This experience drove home the need for strict risk controls, such as limiting exposure to any single trade or asset and setting clear thresholds for maximum drawdowns. I also began incorporating trailing stops to lock in profits during favorable trends while protecting against sudden reversals. One of the most costly mistakes I made was deploying strategies without adequate testing in live market conditions. Paper trading and backtesting alone cannot fully capture the nuances of real-world execution, such as latency, order book dynamics, and liquidity constraints. I learned the value of forward testing, where strategies are run in a simulated live environment using real-time data. This step allowed me to identify and address practical issues before risking real capital. Another significant lesson was the importance of data quality. Early on, I relied on free or low-cost data sources, which often contained inaccuracies or gaps. These data issues led to flawed backtests and, consequently, underperforming strategies in live markets. I realized that high-quality data is not a luxury but a necessity in algo trading. Investing in reliable data providers and ensuring data integrity became a non-negotiable part of my workflow. Adaptability also emerged as a crucial takeaway. Markets evolve, and strategies that work well in one environment can become obsolete in another. I experienced this firsthand when a once profitable strategy began generating consistent losses as market conditions changed. This taught me the importance of regularly reviewing and updating my strategies to ensure they remain relevant. I also started diversifying across timeframes and market conditions to reduce dependency on any single approach. One of the subtler lessons I learned was the significance of understanding market microstructure. Early in my algo trading career, I viewed markets as abstract price movements, failing to grasp the underlying mechanics of order flow, liquidity, and participant behavior. This lack of understanding led to poor execution and unexpected slippage. By studying market microstructure, I gained insights into how orders are processed and began designing strategies that aligned better with real-world trading dynamics. The final and perhaps most profound lesson was the necessity of patience and persistence. Algo trading is a marathon, not a sprint, and success rarely comes overnight. The losses I endured were painful but ultimately educational, shaping me into a more disciplined and knowledgeable trader. I came to understand that losing money is not a failure, but a stepping stone to growth, provided one learns from the experience and continuously improves. In hindsight, every loss I encountered in algo trading offered a valuable lesson that contributed to my growth as a trader. The journey taught me to approach trading with humility, discipline, and a commitment to learning. By embracing the challenges, refining my strategies, and staying adaptable, I turned setbacks into opportunities for improvement. Algo trading is as much about resilience and self awareness as it is about technical expertise, and these lessons remain at the core of my trading philosophy.